Alrighty guys, I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about the whole market right now. Is this a good opportunity to buy the market or should you hold off? What should you guys do? I'm going to be breaking down my strategy in this video. So I hope you guys enjoyed it, and if you guys get anything in value out of this video, please repay me with a huge like. It's greatly appreciated, and subscribe to the channel if you guys love this type of content. Also, you guys can check out my course and get 50% off using the code STOCKMARKET. All one word. I hope you guys enjoyed it. 50% off. Check it out. So now let's jump into it. Roll the intro. Let's go. Bam. Alrighty guys, so we have ticker symbol VOO. This is Vanguard's S&P 500 ETF. You guys can see that we did have this overall recession. The stock market did fall from around $312 all the way down to about $200. Now it did form this like perfect V pattern and really continued the overall trend in the market, which was really nice to see. You know, a lot of people made a lot of money from it and a lot of people lost money in here. But honestly, looking at this stock chart, is today's fall something to be worried about? So honestly, do you guys see this 200 moving average line? That is this yellow line here. This represents the past 200 days' closing prices, and it's merged together to form this line. This line represents a couple of things. When the stock is, when the ETF is above it, you guys can see it likes to use it as support. So really, anytime it comes in contact with it, we get buying pressure. And then when it falls below it, you guys can see that it likes to use it as resistance. So when it came back up, it had a harder time breaking above it. But once it broke above it, you guys can see it clearly used it as support. So now today we did have this overall fall. The stock market is down about 2%, and it is down a little bit from its all-time highs. It is down about 6% from its all-time highs. So honestly, is today's fall something to be worried about? No. Really, for me to get worried, I would need a little break in this 200 moving average line. The reason why is because if it breaks below it, that means there could be a possible switch in the market. Looking at the RSI, which is the relative strength index, this determines whether the market's overvalued, undervalued, stuff like that. So when it's up above a 70, this classifies the market as being a little overvalued. And you guys can see that it really was overvalued. It was overvalued in here, and then we got some sell-off. It was overvalued in here. We got some sell-off, little sell-off and consolidation in here. And when it's undervalued, like it is in here and in here, we get buying pressure. So honestly, when the stock market's falling below a 30, I think this could represent a good opportunity for people to put a little money into this market. I think we're still going to have an upward trend in the stock price and the overall market, but honestly, it's something that's really not too big of a deal to be worried about. Let's look at a couple more here. Let's look at Tesla. Tesla's been in the overall, been in a lot of people's watch lists, and a lot of people were buying it because of the reverse split, and a lot of people thought this was by far the easiest way to make money. Well, stocks go down. This was just a clear sign of a stock being overvalued. At the time, all the way from, even in here at around $388, the price to earnings ratio is significantly overvalued. It's still about an 800, which like Amazon and Disney is like a 25 to 100. That's really a solid earnings that is really just classifying it as more of a growth stock. With the stock being at an 800 on the price to earnings, it's really, really a little overvalued. But the same thing with this one, you guys can see that when the overall stock kind of fell below this 200 moving average line, it did have a hard time breaking above it. But now once it broke above it, look, we had some support come in. Okay, so I do think that this stock could sell off just a little more for it to get back down, but don't be surprised if we do get some buying pressure and see this stock go back up to about $420. Now, the last one I want to talk to you guys about is Apple. Apple is one of the best stocks out there. They have the largest market cap. And Carter, is this a good opportunity to buy in? It is, 18% off its highs. Same thing with Tesla that Apple has. It's just a little overvalued. Just because the stock splits does not mean the whole market cap of the stock has changed. And just because people are buying it does not mean you guys have to buy it. You always have to do your own research, and same thing with Apple. Apple is a fantastic company. They make a lot of money. They represent such a big part of the U.S. economy, but just because people are buying it does not mean you have to. You know, you guys can see that this was just a fear FOMO run. People were scared to miss out on this opportunity, which I can guarantee cost a lot of people a lot of money, with it being around 18% off its highs. Now, this could be a good opportunity for us to make some money, because same thing, support at this 200 moving average line. Really, so those were some of the ones that I am looking at right now for a possible little trade and a little undervalued territory. I hope you guys enjoyed it. So that is it, though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall, stay safe out there. We'll see you guys tomorrow. Take care. Bam.